Welcome to another episode of Beyond Tax Season podcast. Our guest today is Mark Stiles, and ChatGPT helped me read or write an introduction. I think it was just spot on. So, if you think CPAs are just number crunchers, you haven't met Mark Stiles. Mark is the founder of MAS CPA, a fully virtual firm, serves over 700 clients across the US with a deep focus on helping service-based businesses grow with clarity and confidence. He's not just a CPA. He's a former professional basketball player, a leadership professor, and a coach at heart. That unique blend shows up in how his firm operates: education first, insight driven, and tech enabled. Mark's team doesn't just deliver numbers, they tell stories that help business owners make better decisions and build stronger companies. From building a memory lake, I want you to explain that, Mark, of client insights using AI, to training his team to lead with teaching before tactics. Mark is on a mission to make advisory the default, not the add-on. As you'll hear, he's doing it in a way that's refreshingly human, grounded, and scalable. How is that, Mark? Anything you want to add?
No, I mean, I think that's really great. I think I realized early on that compliance delivers reports, but advisory delivers behavioral change, right? And I think that's what most founders need more of, not just numbers and distilling that, but they really needed to make sense. And so it's really been a big focus of us of having education as first.
I got to put you back to behavioral change.
Mhm.
That that's a twist.
It's not really. I mean, honestly, a lot of what business owners do drives off of their gut. And I've had conversations about this, and sometimes, founders and owners take it a different way, but your gut isn't just this innate thing that I was born with. It's the reps that you've put in over time, right? Like, and that gives you the confidence of understanding things, right? And so, a lot of times business owners use their gut, and it gets them a long way. But if you think about that innate behavioral understanding of what your business does, and you can put the firepower of financial metrics behind it, then you have a much better go forward plan. A lot of the times we talk about the duality of business, right? And you're going to have to forgive me because I come from a site development background in construction. So there's moving dirt, and then there's what the numbers say about moving dirt. And your job is to align those two things. And if you can align what the numbers say and what your gut does about that moving dirt, then a lot of the times you can make the right strategic moves forward. That might not be in the same line that your gut was saying or the numbers were saying, but it allows you to make the right decisions. And I think that's where the behavioral change comes from, right? It's very often that you can talk to a founder and or a CEO or anything really, and you talk to them about what they really look at. They look at their bank account. If they're a founder or a startup, I look at my bank account every day. Great. Do you look at your financials? No. You talk to a CEO that might be a little bit more established. They might not look at their bank account anymore because they realize that doesn't matter. But they're like, yeah, I pay attention to how many marketing qualified leads that come in. I pay attention to how many things we delivered in the month. And I go, did you look at your financials? Did you really kind of pull that and peel that onion back and understand what the financials were telling you, not just what the numbers said, right? And that is the behavioral change of understanding that, just like how we can dive into AI and say AI should be your partner to your intelligence and help you really expand your knowledge base that you can communicate out, right? Very similar with numbers. It's the same thing with business. Like, you know how to operate. A lot of the times the best business owners and the really started successful startup are fantastic operators, right? So, delivering is not necessarily the problem as much as it's understanding what delivering costs, both to get that work to deliver, but also to get that throughput out and to maintain that customer as a sticky customer. It takes a lot of different inputs, and it's important that you can see it from all different angles. And I think that's really a big reason why, at MASCPA, we established what we call the box method, which breaks your business down into 4 quadrants in your business box: marketing and sales, operations, finance and strategy, and people and leadership. And understanding that all of those are operating properly and how they relate to specific KPIs that come from the financials that you should review monthly can lead you into a behavioral change that doesn't have you just relying on your gut it has you following what Dalio always advises, which is his old model was he took all of the metrics and all of the commodity sales that happened over a breadth of decades, dropped it into to essentially a database that was just a glorified Excel, and would go, my gut's telling me this. What is the historical data telling me? And when that lined up, he made the action. So if you think about that as for someone who's been highly successful in the financial industry and applying that to just a business principle of going, I have this, and I have my dirt, and I have what the dirt's costing me. And if I can align those properly, then we can make the right strategic decision forward.
So uh, you make so many good points that I want to make sure our audience gets, because
Yeah.
I come from the finance world. So Ray Dalio and his almost philosophical historical writing is part of my data set, if you will.
Yeah,
Who's
of course.
But there aren't that many accountants that if you say that word, they immediately say, "Oh yeah, I know Ray. I know of Ray." So tell us about Ray and how he's guided you. I mean, that for you to lean on any of his observations, how'd you find him? How did he stick out of the crowd of all the authors out there, leaders out there to you?
Yeah, I mean, I think you're only as valuable as the knowledge that you carry and the wisdom that you carry can, that's really the honest truth, right? And so, being fascinated by what makes business work, what makes finance tick, what makes certain businesses successful and not successful should lead you into reading, right? And honestly, when you ask, most accountants aren't doing that, then I'm saying most accountants are spending too much time in their QuickBooks or their Zero or their Sage or their NetSuite files, and they're not spending enough time reading business books. Because if you read business books, it's got a kind of a twofold thing for you, right? First off, it talks to you from a different perspective, right? Than as an accountant would necessarily take it. Second off, it talks the language that all of your customers speak. And if you aren't able to kind of follow that and read, and I mean, if I opened up my office a little bit here, you'd see a full stack bookshelf over here, you'd see books over here, you'd see books over here. It is a tried and true activity that I take on daily to read a little bit, right? And so I think, so to always kind of make sure that I'm sharp, whether that's in communications, whether that's in finance, whether that's in operations, whether that's in marketing strategy, because to be a good CPA and to be a very comprehensive, financial officer, if you're a fractional CFO or if you're a full-time CFO, you need to understand business in a very holistic perspective. And it's easy to go, well, my profession is this, so I'm going to stay narrow. Well, first off, that narrow thinking is probably what's stopping you from growing as a professional. It's definitely stopping your business from growing. And so taking that time and investing, and we do this internally, like we have a weekly book conversation. My chief of staff leads it, and it's going, hey, we're talking about this book, we're reading X amount of chapters, and then we're going to talk about how we can apply it to our business, right? So you can make this an activity that you and your whole staff do, but you as a business leader or as an accountant or whatever should be reading those things. So to get back to your question, Trow, is what brought me to Ray Dalio? Well, I mean, first off, he came out with the book Principles. Second off, if you aren't an accountant and watching CNBC regularly, you're doing something a little bit wrong. And I know you go, oh well, that's finance, and that's what the CFA's for. That's what the CFP's for, and understanding the markets is their job. Yeah, but you know what you can gain a lot from in that is they have CEOs that are coming on and talking about their strategy. They have CFOs that are coming on and talking about where the numbers are really going. They're breaking down, and all the stock market really is a very large board meeting, right? Like that's really what it is. It's a consistent, ever-changing board meeting where you're getting insights. Now you get your quarterly from the horse's mouth, but you see the traction and everything from the stock market and how it changes and how people are analyzing what the numbers are doing, right? So those types of things lead you to people like Ray Dalio, which are going to lead you to a different mind that's in the same realm. Because I know a lot of times we go, accounting is this and finance is this, but the more that they're close and interlocking, the better a business normally is doing, right? We can do your books and have no effect on your finance. but we can't, but if we have an effect on your finance just as much as we have the effect on doing your books, then we're actually in that alignment and in that middle space that I talked
And
about from dirt and
it's
and doing, right?
going to deflect off of that, deflect as much as pivot off of that, where
Yeah.
you talked about in your books and CFO type work, advisory type work. Uh, where do you think the $1 to $2 million compliance oriented firm can start doing this more holistic, transformational, supporting that type of relationship or progress? How do they do that? And let me seed the question a little bit so I don't have to come back in. I'm talking later today with Kane Polikoff of Kohn Resnick, and his perspective is a little different than yours, right? Because it's top 25 firm building out CAS, and I asked him in setting up the call. I said, "Hey, Kane, so what about the guidance, the dashboard, oh, that's FP&A. He's
Mhm.
just the systems and organizing the numbers, making them.
Mhm.
I don't know whether he rebalances or reconfigures the chart of accounts so that it tells a story, but this seems to me the smaller firm has more dexterity or nimbleness to wear more hats that the larger firms have boxed into a discrete service or silo.
Yeah, I mean, I think that's the nature of how your business grows, and I think that's why the structure of your business and how it starts kind of dictates a lot of the time of where you're going. And a lot of the times you'll see, especially people that are on the more solo track or a very small, 5 to 10 people firm, you're going to see them touching a lot more things, but you'll also see that the owner or the founder is normally saying, "Hey, we're a boutique firm." Right, like, and so that boutique allows us to provide different type of value, right? And then you'll see a lot of the times through their story arc that, hey, I was a boutique firm, now I'm in scaling mode, now I'm back to boutique firm. And that kind of is the cyclical wave that happens with a lot of accounting firms. And it's kind of in the sense of almost rebalancing what your system's doing, right? Like what you're talking about with your next guest later on today. They're basically going, hey, we are a compliance shop and we're adding advisory services. So we're adding a little bit of extra value into what we're providing. And we're slowly shifting out of that, knowing that compliance is not going to be the expectation anymore. The advisory and what does that tax return really tell me? And what story does it tell me so that I can make the better decisions in 2026? Right. Same thing with your financials. So they're looking at insights, and then he's right. FP&A is a heavy, hey, we have all these dashboards and we can do all these things and we can pivot off of that and drill down into all these information to really distill all that information. But for 70 to 80% of businesses that most accounting firms are working with, they don't need dashboards, right? Just like they don't need NetSuite, right? Like they have a QuickBooks file, they have ADP, Gusto, Paylocity, whatever payroll provider they use. And that's a lot of the times it, right? They might have a point of sale system, right? That's sure you could get dashboards all day long, but does your audience really need that? Or do they need to understand the story? And that's where it can get lost a lot of the times, right? It's great to have dashboards. I think they're really powerful and they can really help some people that are more visual than contextual. And I think that can help a lot in some situations in the presentation. But when we talk about somebody coming from compliance and then shifting into more of a client advisory services and then wanting to get more into fractional, it's learning how to tell a story, and it's learning how to tell how your holy trinity, which is your balance sheet, your profit and loss, and your statement of cash flows, three different reports that tell one story. That's the play on holy trinity, right? If you're able to take those and not just show the numbers and go, yeah, this is, you were profitable here, and this is how much you own, and this is how much you owe, and this is how much that it took you to kind of own what you own, right? Like, and going through those, yeah, you can just do it at that high level, but that is compliance. That's showing them that you did your work draw. That's proving that your work papers, right? What's different when you start shifting into client advisory services, going, what does that balance sheet actually tell me? All right, hey, I know you look at your bank account more than you look at these financials. You're wondering why you're profitable, but you have no money in the bank account. Well, if we can see here, you keep adding debt. And when you keep adding that debt that does this, and then hey, you're doing these big swings with your line of credit, and you're kind of covering up a problem that's not even any of those two things. So now you have debt, you have a high line of credit, but you are not collecting quick enough, and because you're not collecting quick enough, you never get ahead, right? So those are things that tells us a different story and can resonate with an owner that's going, I pay attention to my bank account balance, and it is this, right? And like in the same type of thing, even if you go to that higher level where we talked about from a CEO that might not be checking his bank account the whole time, right? But hey, I'm seeing that we're getting all these marketing qualified leads in, these sales qualified leads in, but it's not doing anything. Okay, yeah, well, I'm seeing that you guys really ramped up in sales, hot, and your cost of acquisition is out the roof right now. Your strike rate keeps dropping, so then you're not bringing in the right revenue, and then your gross profit's dropping because you're not bringing in revenue, and your operating costs are still the same. Those are the things that we can start telling a story. So distilling the numbers is step one, and that's good that the next guest is diving into that and everything. But at the same time, what they're probably doing, I'm just making a guess here, is they're building out how they present that narrative, because how they present that narrative is really what's proving the value. And I think that's what's the important part of where we are in this world now, right? We're validating more than we're providing new insights, right? There is chat gpt, you can go and do that. There's all these different, there's Claude, there's Perplexity. You can drop in and get a lot, 80% right of most of the stuff that you need to understand. So when your client is coming to you now, a lot of the times they've done some of that prep work, especially the more up-to-date clients. They've done that prep work, right? So you're not going to surprise them with a new tool, but how you implement it and how you can weave that into their story is where you show your value. And that's the shift that most firms need to start coming from, of a value shift. And that's not just at small level boutique firms, that are scaling. This is every level needs to start realizing that value is more important than your hourly rate. And the reality that hourly is for law firms now solely, right? Because they're diving into that.
Well,
Value is everything you got now for
let's
for accounting
because
firms.
there's so many guides out there, coaches, if you will, that are about pricing, raise your prices, connected to
Mhm.
value, all that kind of thing. So how do you do that? I just sat in and listened to Michael King do a mock sales call, if you will,
Yep.
doing discovery. Where are you now? What have you tried? All that sales track, if you will, is really really deep discovery. And he got to the end, and so you think you can get here, but you're here now. So I'm kind of giving you that's the value to you. Well, if I can get you there and it's 12 grand a month, uh, do you want to work together? And they do 70 million, 120,000 all day long. How are
Mhm.
you having that conversation with clients? Because can you give us the size range of your clients, business clients, what in terms of revenue, team, that kind of thing?
Yeah, our target ICP and who we work with typically is between 500K and 5 million in revenue. And they're typically in the trades, service-based businesses, and obviously for tax purposes, we work with high net worth individuals, right? They normally come from those businesses, but you asked just about businesses. So typically trades and service-based businesses. So we're dealing with anything from law firms and agencies to rev ops agencies and things of that nature from a service standpoint. And then from a trade standpoint, we're working from the construction industry, HVAC, everything you could imagine, kind of in that kind of electricians, trades space. So hopefully that addressed your question of kind of who we're really targeting, right? So
How do you the value conversation
yeah,
with,
so
and because in my experience, as the folks start to embrace the idea that they're in a commodity priced business, and if they don't move to value pricing, it's just going to be that classic race to the bottom, getting
yep.
clients by pricing. So how do you have that value conversation with your, let's not talk about the 500 because that's going to be limited budget by default,
Yeah.
but at the 5 million, how do you talk to those folks about your value proposition, and this is what's going to cost you on a annual, monthly, quarterly, however pricing you do?
We very little talk about that. I think that's the secret.
Interesting.
If you're about value, you're about where your customer's going. You're not aware about where your customer's at, and you're not having a conversation, writing down each little thing and trying to relate that to an hourly rate, right? It's really easy. And the old school model is going, okay, cool. You've got an S corporation. Okay, great. You got an S corporation. All right. Do you have any sub entities that are there? Okay, you got two sub entities that are there. Okay, they all roll up into one tax return. Okay, cool. So then I know that your tax return is going to be $2,500. Okay, good. All right, and then you're saying that in your head the whole time while you're supposed to be listening, and you're supposed to be in tune with the customer that you're working with. So when we start in, not into going to mock sales kind of thing, but I'm always starting with like, how can we help you? And that's a genuine question. And I think that's one of the core pillars of our values is extreme honesty, right? So I'm going to come in and we're going to have an honest conversation, and I'm not going to pull punches, right? And so where can we help you? All right. So, and then from there it's going, can I pick from that in the reality that trades-based businesses and service-based businesses are very repeatable. It's why you niche down, right? If you can speak the language of if I can speak the language of my ICP, that's the only place I need to be around, right? Because I can resonate with a contractor. Since the first day I worked at a site development company, I came in for an interview and he told me, if you ever come in a suit and you ever don't have a pair of boots on, you'll never work here again. And I've worn boots everywhere I go. So when I walk into a contractor's place and I'm wearing a pair of my Tacovas, he's not thinking that I'm kind of big dog and I'm coming in a suit and fancy shoes, right? He's like, all right, this guy's got his work boots on. Like and they know that I'm putting my boots on one foot at a time, right? Same type of thing when we talk with agencies, where we're talking rev ops and things of that nature, they see me out. They know that I'm involved in some of the outreach and certain things of that nature, and they understand that I can resonate with what they're working with, whether they're implementing clay with clients, whether they're working on sequences and building out a true ICP framework and a true narrative on where they're bringing each one of their clients. So if you kind of pull from that, then you have exactly the tone, the framing, and the content to speak to your ICP. And that's really why you niche down. Everybody says, oh, it makes it easier to sell. It doesn't. It makes it easier for you to really resonate with that customer. And so if you have a new client that come in that's in your ICP, you can just talk to them. And so you're talking to them about it, you're understanding where it is, and then this is where the reps that you've put in over time working with multiple different companies really pays off for you, because then you start going, oh, I noticed this. Okay, this is something that we can talk about. So tell me about here. Like, tell me, what have you done here? So perfect for trades. Like, hey, it's the end of the year. Like, I'm sure that you got some equipment that we need to look into. Hey, we're in New England right now. I know it's about to snow. You just started up your practice. You've got 3 new vehicles. And you're also showing 100 grand profitability. We could get 3 plows to put on those trucks. That's going to bring you in extra revenue. And you know what we can do? We can immediately Section 179 that, because you've been profitable this year. That's going to give you savings, but also help you invest in it, because the IRS is going to reward you for investing in your own business. Those little things are providing value through your sales conversation. So then when it comes up to it, they're normally going to go, okay, so what's the next steps? Right? And then you go, okay, so based on what we've talked about, you're going to fit into this profile. For us at MAS CPA, we have pathways. We have a startup pathway, we have a scaling pathway, and we have a sustained pathway. All of those are based on revenue markers, but also understanding the client, right? So we might have some clients that are 0 to 500, but they are really in sustain mode. They are that boutique firm. They just want to stay that way, right? But so we got to work with them a different way, but they're going to want more involvement on a day-to-day or a week-to-week basis. We might have somebody in a scale mode that's at 1.5 million, right? That normally we cap that at $1 million. It's at 1.5, but they keep growing, and we got to keep that foot on the pedal there. So we create pathways, and clients fit into one of those 3 pathways, and those all have a price point that's involved with it. And if that price point's out of their range, that's okay. They were not my customer. And that's really how we go about it. So we have a
So,
great conversation where we provide a little bit of value. We also understand where they're at, so that we can, if we decide to go forward, we can build off of that,
mhm,
right?
mhm.
And then from there, then we lay out pricing at the end. And if they don't want that pricing, then we might ask, hey, what could change your mind? Right. But a lot of the times, if you got the right reps in, when somebody says, yeah, I can't afford that, then you go, okay, that's fine. Well, I know a couple CPAs down the road you might want to talk to, right? Like, but you're not a fit for us, right? Because I'm not going to take on work, just like I tell with trades guys, right? That do a lot of project-based work, right? that don't job cost. And when we started getting them in job costing, we go, 30% of your jobs you're losing money on. So why are we even doing them? Oh, I didn't even think about it that way. I just needed jobs. No, you didn't. You needed these jobs, right? And so it's very similar in our world. Just accountants, CPAs, and even fractionals refuse to eat their own medicine. And it's tried and true. I used to think that I was the only person that didn't eat my own medicine for a long time. We don't. We're spending so much time helping other businesses grow that sometimes we don't look inside. And this is the big thing to do. If you don't have a tiered 3-step model and understand that the psychology of a 3-tiered thing means most clients are going to pick that middle road, right? As long as you've presented your value properly. And presenting your value properly isn't, hey, so you got this and we could do this for you. It's legitimately having a conversation with somebody and letting that customer know, or that potential customer client know, that you understand where they're at, you understand where they're going, and you are the right person to help them get there. And if you can convey that without being salesy, you're pretty much going to always land them.
Yeah. Well, that kind of wraps it up, man. That's a great business model. So I would go with I give my clients the target of 3% of gross revenue is the
Mm-hmm.
proper investment in the finance function. What do you think about that as a target, a place to play?
I don't think that's a bad thing. 3%. So we're talking about, $1 million company paying about 30 grand. Yeah, I mean
Mhm.
that would make sense. I mean, from a holistic perspective, I mean, if we're dealing with like $1 million customer, they're probably paying around, between 30 grand and 60 grand.
Mhm.
And that's just really based on the complexity that they have within
Sure.
their operations. But yeah, I mean, I think you should be thinking, about 3% would make a lot of sense, right? I think that you've got to realize though that as we get lower and lower in revenue, right, you're not going to be able to hit that 3% marker. And if you're smart, like, to be smart on it, you need to set a baseline, right? Like,
Yeah.
you don't do bookkeeping under a certain amount, right? Like, or you're gonna lose your rear end over time, right? So those are
Yeah.
all things that you got to keep in mind. But 3% makes a lot of sense.
Good. I'm glad we're constant on that. I got that from James Ashford, the author of Selling to Serve and the founder of
Okay.
Go Proposal. But
Yeah.
I want to, well, let's try here. Where most CPAs go wrong. What do you see most firm owners getting wrong when trying to do advisory?
Um, you treat it like it's a tax engagement or a bookkeeping client. It's not. It's it 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 involves a few factors that you don't have to do in your compliance-based work. And that's where you need to find people that can communicate. My I won't sugarcoat that. A lot of my success has been my ability to communicate. Some of my failures have been my ability to over communicate. So it can hurt too, right? But I think when you get into a thing of, hey, all I need to do is give you data, and if I show you the data, then I'm doing my job. It's not. Like, you have to tell the story. You know, they think it's doing, or they think it's doing more, and I have to do so much more. You don't. You can take your 3 financial statements, and if you can tell that story properly, like, that's all that they really need. And third, they try to scale deliverables instead of conversations. When you're in advisory, think about what the word is, like, you're advising, right? Which means you need to be listening, which also means that there's part therapy that's part of your conversation that you have now, right? And your job is to understand those signals just like you understand signals from a financial statement, right? If you have a customer that you can see that they're profitable, but their revenue doesn't, their profit doesn't line up with their bank balance, right? You can, and that bank balance keeps constricting and constricting. The next time you get on a call with them, you are not going to have an even keel owner. You're going to have somebody that's like, I don't know what to do next. I'm going to shut the doors if I can't, because I can't pay payroll next week, right? Those are things that you got to understand and you got to pay attention to. And I think that's big on where you can really use AI to really be your best friend when you're in an advisory service. Like, full transparency here, we've got like 4 different note takers that are on in just this podcast, right? If you're leveraging that with all of your customers, you can take that information and build out that memory lake that you said you wanted to dive into a little bit um, later. So what we do is we build custom GPTs that has recordings for each one of our customers. So there's a custom GPT for every customer that we have, and all of our recordings meetings go into there. So that if we need to mine data, we can come back in there and go, okay, what was this last call? What was this last call? Right? Those types of things allow you to be more efficient, but also to pay attention. And if you create it in like a custom GPT, and I don't want to get too heavy into AI and everything, but if you create it in a custom GPT, you can create guardrails for it. You can say, hey, this is where we need to stay within. These are the things, these are the signals that we need to always pay attention to. These are the summary that I want to see when I go into this meeting or this meeting or that meeting, so that you can really always prep yourself, because in the advisory space, the more prepared you are, the better off you're going to present. And if you present better, then you ideally resonate better. Now, if you don't resonate, you gotta realize at a certain point in time that you guys aren't clicking. And especially in a fractional position, a fractional CFO position or advisory, you got to remember that there's a Bert and Ernie relationship that you got to maintain. And your CEO or founder is Ernie, and he dreams and he has a million initiatives and he wants to do everything. And your job is Bert, and you're counting pigeons and trying to see if those pigeons align with where Ernie's trying to go, right? Like that's where you have to kind of stay very firm. So having a good understanding from a psychological standpoint, from a not giving too much information and realizing that people only consume things in threes, right? There's a power in threes. I am the basketball commissioner for my town's athletic association for our kiddos, right? And I always tell our parent coaches, you can't teach more than three skills. They just won't in a season. We just can't. They're not going to learn it. They're not going to pick it up. You got to teach three, and you got to drill it into them so that they can get into reps. And then and if you think about that from just a kid's perspective, and then you think about even the conversation we just had, I'm probably going to say the exact same thing about adults as well. And it is true. And it is true. It's what, we think about phone numbers, 603, 303, right? Like, even the last four numbers, 2072. All right, that was 333. That'll help you remember it constantly. Throwing that out there too. That's my cell phone number. So we probably want to redact that a little bit, or you can give me a phone call. Either which way, right? But powers of three. So if you can go in and realize that I need to give, when I'm in my meeting, I have three goals, and that should be to convey three messages. We have a 3 for 30 meeting that we have with our clients, three messages, and then we move on. We don't want to overwhelm with data, right? We don't need to do more. We need to tell more. We need to explain more, and we need to tell what those signals are telling, and we have to distill that to our customers. And then lastly, you're scaling your conversation. So you've got to have people that can talk. In our industry, there is workhorses, and then there is rainmakers, and too many
That's ex-
people workhorses.
and that was exactly what we came up with as the close. What's next and call to action. If someone's listening right now and wants to shift toward this model, where should they start? And in our first meeting, you said teach one thing well. Start
Yep.
with one insight every client meeting.
Yep.
Hire for communicators,
Mm-hmm.
not just technicians. And Mark's final advice for CPAs ready to evolve beyond tax season.
That's it.
That's
So,
amazing.
if you get to past a place where you're not just explaining numbers, you're translating them into better habits, better cash flow, and better business decisions.
Yeah. I love the you started off, and because it didn't come out in the first meeting, that you're looking for behavioral change. Why don't we wrap that one up? What again does that mean, that your service is leading to behavioral change?
If you're doing your job right, you're helping a business succeed. If you're helping a business succeed, you're identifying what blocks them. If you're dealing with small businesses where somebody took a skill, a passion, an idea, a widget, a solution, and then made that into a business, you have somebody that passionately believes in something, and your job is to nurture that. And if you're not thinking that way, then you're not going to survive in today's economy, right? Like the generations that are now in front of us is one that prides themselves in being thorough and understanding all the new things and being able to implement them in record speed. right? And the generation that we're in, or that's before us, is thinking and is calculative, and probably is too slow, right? So you're going to have a polarity of people that you have to deal with to really get to a place where they can succeed. But your job is to help them succeed. And if your job is to help them succeed, then you need to understand, and you have to take the time to realize that they're not just a set of numbers. They're a business that you have to focus on. I don't know if I answered your question there, Trout,
Well,
but
it's the behavior. It's like you started off with the gut and the numbers, and it's a blend of the two. So, but you take responsibility for helping them change the behavior. And
and that's the thing. So like the behavior comes from helping understanding where they're at and where they need to go. And that kind of ties into where we were talking about the initial sales hook, right? If I understand where they are and where they want to go, then my job is to facilitate that support to get them there. Right. And so that is going to sometimes be a behavioral change, because that passion that they have is driving a lot of innovation. And they might not be somebody that plans out and likes finishing things. They might just, oh, here's the next new thing. Here's squirrel, right? That Ernie mentality, right? Squirrel. All right, we're off to this, right? And so that behavioral change in getting people out of that, hey, this is my world. I do dirt. Like I understand dirt back to front. I have this because it's a necessity. My finances are a necessity. And when they stop being a necessity and they start being something that you use, to get back to our Ray Dalio part, to create alignment, that is behavioral change. That's going, hey, I'm no longer just going, I know what I do best. And I started this because I had this passion for this thing, this service, this widget, this product, this solution, right? Like instead of that, now I have that passion, but I also know and understand the story that my numbers are telling me, so that I can make the right decisions. Because success in business is all about the right strategic business decisions you're making. And one of the best quotes I ever heard was like, a lot of people say strategy and it's just a plan, right? We're going to go do these things. Great, awesome. Strategy is going, like I can target this and this should produce this. Now we can build a plan to get there, but my strategy is we are targeting perfect. I'll use me. I'm targeting trades-based businesses and service-based businesses. We plan on ramping up our monthly recurring revenue, by 2x within the next 3 years, right? So if that's my strategic goal, and what do we need to have in place every $30,000 we need to bring in a new fractional resource. Every $70,000 we need to bring in a new 5 new bookkeepers. Anything like that. Now I'm just throwing out numbers, right? But those are all that. But then how I go about that is a plan. And that's the difference. A lot of people just roll forward and go, hey, we're going to go do this now going forward. And that's a plan, but it's not strategy. And that
I'm
is
hearing
that
you
middle
say
point.
you
That's
get
the
down
middle point.
you get down deep enough to actually help them track their plan, create the plan and track their plan.
Yeah, that's the whole thing. Like if you want strategy, if you want advisory services, you want strategy. You don't want planning. Anybody in the world can come in, and that's why there's a bunch of coaches, right? They go, okay, so you need to do this next. So then this is your plan. And then they follow up with you. Have you done your plan? My job's not to babysit you. You can get a coach for that, right? Our job is to talk about advisory and strategy, and how that strategy works, and where you want to go, and what that would translate into a budget. And then you have to work with all of your quadrants to break it down into our box method, right? You need to work with each quadrant so that they understand where the strategic goal is, and they apply the right plan to their quadrant to support your strategy. And so our job is to distill those numbers, to give the CEO or the founder the confidence that the strategy that they've came up with is working properly. And if it's not, then they need to go to their marketing and sales leader and have them change the plans that they're going on, or their operations, and go and fix their operations. I'm not jumping in and helping you build stuff. Like we're talking about where your strategy is. We're peeling that back into consumable KPIs that support your strategy, or show that your strategy is not working, so that you can make the right business decisions to pivot, so that dirt, what the numbers are telling you, and your strategy is the middle point, that knowing that dirt and knowing your numbers is giving you that clarity. And if you have that clarity in the middle point, then you can really lead your team properly. And then it's just about communication, right? And then it's just how you're telling your sales leader, how you're telling your operations leader, how you're telling you're talking to your HR team, right? Those things. So hopefully that gave some clarity.
Thanks so much, man. That you bring so much energy to this conversation. I can only imagine what you bring to your clients and your team.
Yeah, yeah. I mean, you got to try to not get too excited, right? Because you get too excited, then you give too much information, like I said earlier, and that can be Achilles heel for you, right? But yeah, no, it's been a fun journey. You know, I love doing this. I love helping businesses grow, and so for me, that this is kind of just common nature.